Imagine going into business with somebody and having a product so great that the business that you went into partnership with axes your partnership out of nowhere and then begins to slander you, your brand, how you make your products, so on and so forth. This is what we're talking about when we talk about the Novo Nordisk and Hims partnership coming to an end just last month. Not only did it just come to an end, but Novo Nordisk came out and completely slandered Hims and Hers, saying they had bad practices, shaky practices, and just overall not to be trusted with their processes. Even though their processes have been looked over by countless medical professionals, health professionals, etc., and they found nothing wrong with their basically knockoff brands of these products. But lo and behold, we get a specific answer basically a month later. A month later, after the massive breakup and Hims and Hers dropped 30+% in one day. We finally get an answer to why. Well, I'll tell you why. Novo Nordisk tumbles on weaker insulin sales and new CEO appointment. They dropped 30% themselves in 3 days. Why did Novo Nordisk drop 30% in 3 days? Well, it's simple. Their Ozempic or their Wegovy, their GLP-1, their fat shot has been getting its market share eaten up and eaten alive by Hims knockoff brand. The reason NVO severed their partnership was because they wanted in the partnership with Hims for Hims and Hers to stop selling their knockoff GLP-1s, their knockoff fat shots, so that Novo Nordisk could keep selling their Wegovy and keep and basically start taking back more market share that they were actually losing and run dominant performance over the entire market for GLP-1s. Hims and Hers said, no, 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 we're not going to do that. Why would we do that? Just because we're partners now doesn't mean you get to steamroll us just because you're the bigger company. Just because you're the big dog doesn't mean that you get to tell us what we're going to do with our products. So what does Novo Nordisk do? They slander Hims and Hers. And the CEO came back out with his own post and did very well at, counteracting that. But the damage was already done. They put out that they do shady practices and how they make their GLP-1 knockoffs. They put out there that, they do it in a shady way. And so now there's a lawsuit against Hims and Hers, SEC investigation. There's a lawsuit, as we can see here, faces security class action. Hims and Hers Inc. faces securities class action after Novo Nordisk cancels partnership over deceptive marketing of Wegovy. So now because of this, we got all this craziness going on with Hims and Hers, and Novo Nordisk basically put a hit out on Hims and Hers. But it's funny because Novo Nordisk came out with basically less than great sales of their Wegovy, and now the stars are aligning, but the damage is already done. Now you have two companies that are facing class action lawsuits by the SEC and getting investigated. So not class action lawsuit by the SEC, but getting investigated by the SEC and having class action lawsuits against them because their share price, when share prices drop 30% in a day or so, lawyers smell blood in the water and they start gathering up shareholders that lost money and they go after them with a class action lawsuit. So that's what we're seeing now. So now Hims and Novo Nordisk, which started as a great partnership and they were both going to benefit, now turns out that Novo Nordisk just wanted to steamroll Hims and Hers and basically just say, we're the bigger guy. You're the small guy. You're going to do what we say because we did this partnership. And Hims and Hers said, I don't think so. That's not how this is going to work at all. Um, I don't know if you know this, but we're taking market share. People love our product. Our subscriber growth is growing phenomenally, right? So they basically said, no, 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 that's not how this is going to work. That's not how this is going to work. So we come to a head, and I wanted to get into talking about hims and hers. I wanted to talk about, is this company a buy today? What's their valuation? What does the future look like for hims and hers? Right? They had their own 30% down day, and now they've bounced back since then. If we look over here at the chart, we can see I posted this live and shared this in a video as well on hims and hers. And I said, hey, we have the dip buy box between 34 and 45. We got to a low of $40.88. And now we came out of that dip buy box. If you were buying here, you were up a massive 60+% on your investment on hims and hers if you were buying the dip buy box. I post these levels all the time for free, sometimes on X, but I also post them in my Discord, in my community, the H5 community. If you're interested in joining that, link is in the bio. You can come on in. We do trading, we do investing, we do it all. It's where trading and investing meet. If you are interested. Also, while you're here, smash that like button. Subscribe if you're not already subscribed. To do videos like this all the time, guys. I really appreciate it. I love you all. Now let's get back into this. So at this time, we're coming up into resistance, as you can see here, L resistance, as I call it. But here's the thing. We aren't yet up here hitting the red barrier, which is you cannot go higher than the red barrier. You can smash into this and still go higher on the stock price, but then eventually you see we will swing back down, as we always do. We eventually will swing back down with the Williams percentage range and the momentum indicator. So would I be buying a ton of hims right now? Absolutely not. The time to be buying was back in here, back in here, back in here, or sub $25 per share. That was the time to be buying. Right now, if you didn't have a position in hims and you wanted to get into it, I would wait for a pullback, or you can simply dollar cost average a small amount now. And as we drop 10, 20, 30, 40%, you can start adding more and more to that dollar cost average. But we do have we could run a little while more. As you see the RSI back here, when we hit all-time highs, it got up to oversold level or overbought levels about 84. We're currently only at 64, so we do have quite a ways to run on the RSI to run higher. I can see us getting back to all-time highs very soon, up to about 73, 74. If we break over in a weekly candle and close over $74 per share, I can see us moving to 80, 90, then $100 per share. Pretty quick. And it's all going to come down to their earnings. They have earnings on Monday. They're expected 15 cents of EPS and $551 million in revenue. They're going to report Monday after the bell. And yeah, I think they could do very, very good. Very, very good. If we go over to here to my H5 Snapshot, we can see we're going to run 3 projections. We're going to run a bear case, we're going to run a base case, and we're going to run a bull case. So right now, based on the updated numbers before Monday's earnings call, hims and hers base case or bear case would be a 15 terminal fair value. Base case would be a fair value of $54 per share. So we are currently 21% overvalued if you're running the bear case. So that's actually not that bad unless you were buying now, right? If you were buying at $48 or below, then you're perfectly fine. Base case is going to be 20 terminal fair value, and that's going to be 20 terminal value, and that's going to be we are basically at fair value right now on a base case, a conservative base case. Our bull case is going to be 25 terminal value, and that's going to be we're 17% current margin of safety. Our fair value is $79 per share. So meaning we're still 17% undervalued on hims and hers right now, even after the massive run. If you want to go bull, like ultra bull case, I would say a 35. terminal value, and then we would be looking at 37% undervalued today, and you would be looking at $104 fair value today, right? This isn't in the future. This is today's price. And that was based on a discounted cash flow model. If we were looking at an EPS model, they are a bit frothy right now. You can see from 2026 to 2029, they're in a range of $50 to $66 per share fair value, and we are right now at that fair value. But Hims and Hers is a growth beast. They're expected to be growing mid to high teens over the next 10 years, and I could see them even growing 20% plus over the next 5 to 10 years. So it's just really going to depend on those growth rates. But if you look at it on a PE or free cash flow yield, um, or an EPS, they are a bit extended here. They are a bit overpriced. If you're looking to buy on the base case, right, you wouldn't be buying here because they're at fair value. Or if you did, you would just nibble a little bit. If you were going to take the bear case being a 15, you wouldn't be buying here either because you're 21% overvalued. If you believe in the bull case of a 25 terminal fair value, the bull case would be a $79 fair value for Hims and Hers, and that'd be a 17% current margin of safety. On the technicals, I do believe is if they can break out of all-time highs and close above all-time highs, they could run to 80, 90, $100 per share. But and just because the fundamentals say this is the fair value, you know, stock price doesn't always equal fair value. So just because you have just because a company is supposed to be priced this way based on the fundamentals doesn't mean that the stock is going to be perfectly priced there. Usually what happens is you get depressed prices when sentiment is bad. When sentiment is bad, you get a very undervalued and depressed stock price compared to the fundamentals. When sentiment is really good, hype is there, momentum is there, typically you get this euphoria in the stock price, and the stock price way outreaches the fundamentals. Case in point is Palantir. The fundamentals are here. The euphoria, the momentum, and the stock price are up here, which is fine. Palantir is a phenomenal business, a phenomenal company that will continue to grow in the future, and I believe will be a $1 trillion company one day. And if you're already in it and you've already trimmed a little bit and you just want to sit on your shares, that's completely fine. There's multiple ways to play this game. Okay. But going back to our H5 Snapshot, you could just see that for today, Hims is still a buy, but it's a small buy. You shouldn't be going out there and buying 100% of your position that you want to build. I would build no more than a 10 to 20% position at this time in Hims and Hers. I would wait for a pullback, and if there's one thing we know about Hims and Hers, they always have a massive pullback eventually. So, last thing I wanted to cover in this video, guys, I wanted to get on here on visual stocks and just kind of look at the trajectory for this company and what I'm seeing. If we just scroll down here, we can clearly see it. Quarter over quarter subscription growth, massive. As long as we continue to see this quarter over quarter subscription growth while also seeing quarter over quarter revenue growth, Hims and Hers is going to grow as far as the eye can see. As far as the eye can see. Once you get decelerating quarter over quarter growth in subscriptions or revenue, then we could see a major pullback, and then we can start saying, okay, what's going on? Maybe it's just a one-off. Maybe it's just a one-off bad quarter, and then they get right back to doing very well. If you have a one-off bad quarter, but then also that if it's not a one-off bad quarter and it's followed up by 2 consistent quarters of decelerating growth with revenue or on subscriptions based on the quarterly results, quarter over quarter, then you could have real problems in the business, right? But until that happens and you're just a steady climb higher and higher and higher, and then you see estimates and analysts have it going higher and higher and higher, they do actually have this deceleration here for Monday. The Monday quarter is supposed to have deceleration of growth. So that could throw some wrenches in the stock price and could give you a good opportunity to buy back in. And then you see analysts have them going straight back into that acceleration of growth. It's really hard to go every quarter, like one up every quarter. Like trying to one up yourself every quarter is very difficult. But yeah, EPS is supposed to continue to grow here as well, continue to the profitable side. And you see yearly, you're supposed to continue growing EPS, continue growing revenue, and EBIT estimate is supposed to continue to decrease. I really like it. I really like where they're going. If we look at a yearly chart, subscriptions, net orders, average order value, revenue, net income, free cash flow, it's all going in the positive direction. Exactly what you want to see with a great business like Hims and Hers. Shares outstanding have spiked in 2021, but since then it's only been a steady gradual climb. Nothing crazy. They're not hockey sticking straight to the sky like we see with revenue. And their cash to debt ratio is amazing. They have let's see, 220 million in cash, almost 80 million in bonds, and only 9.5 million in debt. Really great. They could pay off all their debt like that tomorrow, and it would be amazing. Um, and then you see your G&A, research and development, SMA. It's all growing, but it's not too crazy. It's growing with the business. The biggest thing is they advertise a lot. I've been seeing a ton of Hims advertisements. I don't mind because I believe they have such great retention. They have such great retention of their clientele that once they get you into that subscription model with whatever medical whatever telehealth that you need or medicine that you need, once they get you in that subscription model, I mean, it's just a revolving door. Like it's just a subscription every single month that Hims is raking in, and they're very, very good at keeping clients. You see monthly revenue per subscriber that's continuing to grow quarter over quarter, year over year. It's continuing to grow. Historical margins are doing great, and operating leverage is doing great. Wholesale revenue. If we go over to ratios, um, like I said, you have to really value this one based on a discounted cash flow model because the EPS really isn't there yet. So you have to be looking further out in the future. If you wanted to look at it based on EPS, if you wanted to look at it based on PE, it's a 96 PE right now. It's very expensive. If you're just looking at a PE, but you're going to pay more for a really high growth business. They just did 111% year over year growth, guys. Crazy stuff. Crazy stuff. They're doing really great. They're doing really great. Great gross margins, great return on invested capital, cash to debts, thumbs up. Everything's looking great for the company. In some areas, it's a little expensive. That's why I'm telling you, based on the H5 Snapshot and everything, I wouldn't be a big buyer of Hims and Hers today. You've had multiple opportunities to get in under 25, under 35, under 45, even under $50. You've had tons of opportunities. There's thousands of stocks in the stock market. If this isn't aligning for you right now, which I'm not a buyer of Hims and Hers right now, then find a different stock. We talk about different stocks all the time on this channel. If you're interested in learning more about, new stocks that I'm buying or researching or looking into, definitely subscribe to the channel. Drop a like because I continue to put out content here, so you can stay up to date on the markets. You can have my strategies that I use for investing and trading. We go over my public portfolio, and just overall that we can research these companies together. We have a bi-weekly live stream where we go through the fundamentals of companies and looking at all the fundamentals and figuring out, doing our due diligence and doing our deep dives and making sure that this is the company that we want to invest in or it's not. So, especially now with the market being all-time highs, it's really hard to find undervalued companies. It's really hard to find undervalued companies right now. If you find them, I'm just dollar cost averaging into them, things like Oscar, companies like D Local, Zeta, a lot of those companies super undervalued. United Health Group, super undervalued. They're going to turn the ship eventually. But I'm just going to keep on dollar cost averaging into those companies. And eventually the tides will turn. The pendulum will swing into the other direction, into euphoric. right now it's super depressed on a lot of those healthcare, health insurance names. But I appreciate you guys being here. Hope you enjoyed the video. I will catch you guys in the next one. Have a great day.